Oh, good morning, Dunkin' Donuts. Here I am, Kenny Pulcari, your host of the party. Having my Dunkin', it's my second cup, just so you know, but it is 7:45 in the morning. In any event, today is Monday, April 11th, 2022, and here's everything you need to know to get your day started, right? So the weekend came and went, yet the crisis in Ukraine continues with no letup. Oil under pressure this morning as the demand destruction story gains steam because of what's going on in China, but we'll talk about that in a moment. Treasury yields continue to push higher ahead of the key economic data in the U.S. in this shortened holiday week. The VIX, the fear index, is up 24% last week and going higher as we move through the week. And Lonnie Musk, well, he's not joining the board of Twitter. Oh boy, because that's going to create a lot of conversation about what his intent really is. And what are we having for dinner? Well, Easter's coming, so we're going to have the leg of lamb, the roasted leg of lamb. We'll get to that at the end. So look, the markets continue to be confused over Fed policy, the pace and increments of the tightening, not if there is a tightening, right? Along with the ongoing crisis in Ukraine, and that's helping to send investors scrambling yet again as last week ended. By 4 o'clock on Friday, we saw a mixed reaction in the market, right? The Dow gaining 137 points. The S&P gave up 12 points. The Nasdaq declined by 187 points. The Russell fell by 16 points. And the transports lost 195 points, or nearly 1%. This morning, we see the 10-year Treasury yield jumping to 2.75%, sending bond prices lower, right? The 5-year yielding at 2.8. The 30-year yield is now pushing higher at 2.75, and that's bringing 30-year mortgages to the highest levels in years. Conforming loans now have a 5.1% interest rate, while jumbos are better than 5.5%. And so this leaves the 5s and 10s and the 5s and 30s still inverted, right? So that's a conversation, although they'll tell you really quick, the 2s and 10s are not inverted, so it's not a big deal anymore. I think it's baloney. Oil, which has been all over the place of late, settled up 2.3% on Friday to end the day at 98.26, well below the most recent highs of $130 a barrel. Recall, Joey announced that the U.S. is going to release 1 million barrels a day for 6 months. It's 180 million barrels from the Strategic Petroleum Reserve. And the countries in the IEA, the International Energy Agency, are also said to release an additional 60 million barrels over the same time period. And that's caused the price of oil to be pushed artificially lower. And while it might feel good right now, it has done nothing to reduce prices at the pump. Now, this morning, oil has done a 180 and has given up all of Friday's gains as negative economic news and ongoing COVID lockdowns in China hits the market. Both producer prices and consumer prices in China rose more than expected, and that sent investors running for the door. Stocks fell by 3% in China, 3.2% in Hong Kong overnight. Add in the latest news that COVID cases in Shanghai are soaring to a new record high while schools are closed in Guangzhou. And only adding to the angst. Government authorities warning citizens to don't even think about leaving their houses or the city. The idea that China's economy is once again going to go into reverse is fueling the demand destruction story for energy. This morning, oil is down $1.50 or 1.6% at 96.74 a barrel as it tries to hold on to the trend line. If it fails there, then, we'll take another leg lower. Last week saw the VIX begin to lift its head again, up 24% as the angst in the market heats up. Much of it being credited to the latest move out of the Fed and all members now lining up to push for swifter and more decisive moves in rates and balance sheet reduction. The ongoing crisis in Ukraine and now the reemergence of COVID cases across China is causing widespread lockdowns in 2 key port manufacturing cities, Shanghai and Guangzhou, suggesting that new supply chain issues will emerge. Continued nervousness could see the VIX spike higher once again, and that would put renewed pressure on stocks, which might then cause money to move to U.S. Treasuries, forcing Treasury prices higher and yields to come in, or maybe not, right? This is not the time to fall asleep, so pay attention. This morning, as we wake up, we're seeing global markets under pressure. Like I said, stocks in Asia lower for all the reasons I stated, plus new regulatory drama in the tech space coming out of China. Tech stocks in Taiwan taking it upside the head with that Taiwan index down by 1.5%. European stocks are also down across the board. The presidential election in France is at the top of the agenda. The first round of voting does have Emmanuel Macron with a very narrow lead over repeat nationalist challenger Marine Le Pen. Now remember, the fear is that if Le Pen should win, which is unlikely, she would make France less business friendly, never mind that she's also a Eurosceptic, meaning that she is opposed to increasing the powers of the European Union, and she is opposed to continued European integration. In addition, the ECB, the European Central Bank, is set to meet in Frankfurt on Thursday to discuss the next policy move. Now remember, Christine Lagarde, ECB president, made it clear that she would defer to the Fed chair, Jay Powell, to make the first move on rates. Now he's done that. So let's see what the ECB has up their sleeve. At 5 a.m. this morning, European markets were all down about 0.5%. U.S. futures are also joining in, right? And they are lower this morning. At 5 o'clock, the Dow is down 105, S&P's down 26, NASDAQ down 150, the Russell down 8. The weakness in bonds is sending yields higher this morning, and that is at the crux of what is happening to U.S. stocks. Yes, the Asia story, yes, the Ukraine story, and yes, the political story out of France are all subplots. But let's not kid ourselves right now. The issue here in the U.S. is what the Fed is about to do. Many asking if a soft landing is possible. And of course, you're going to get every Fed head telling you, sure it is, no worries. While all the street analysts and strategists say, wait, not so fast, big boy. Not happening. At this point, I'm in the not so fast camp, considering that the Fed completely dropped the ball on the speed and pace of inflation 8 or 9 months ago, leaving them way behind the curve, forcing them to have to act more aggressively. And that has caused stocks to reprice aggressively, leaving the Dow down 4.5%, the S&P down 6%, the NASDAQ down 12.5%, and the Russell down 11%, while the transports are down 12.2% year to date. And they're down even more off their November highs, but that's another story. Now, tomorrow, we're going to get the latest consumer price index report, right? The CPI. And do not expect it to surprise on the downside. Not happening. The CPI month over month is expected to be up 1.2%. Ex-food and energy about up 0.5%. CPI year over year is expected to show an 8.4% rate, up from 7.9 last month. And ex-food and energy of 6.6, up from 6.4. Then on Wednesday, we're getting the producer price index, the PPI report, and that's expected to surge as well. PPI month over month up 1.1%. Ex-food and energy up 0.5%. PPI year over year of 10.6%, up from 10%, and ex-food and energy of 8.4%. On Thursday, we're going to get advanced retail sales, and so let's see how the latest inflation reports, what they do to consumer spending and the consumer psyche. Remember, it is a short week. Markets are closed on Good Friday, and it's also a vacation week, so expect lower volumes and potentially bigger swings in prices, right, as moves get exacerbated. This weekend, there was a big blockchain event in Miami, postings all over LinkedIn and Instagram, but that event is doing nothing for the price of Bitcoin. In fact, it's hurting this morning, right? So this morning, we're seeing Bitcoin down better than 4%, trading at 41,900, 800 right in there. Ethereum trading at 3,100, both lower from where they were last week, and Bitcoin down from 48,000 just at the early part of last week. The S&P closed at 44.88 on Friday as it tries to hold on to the trend line at 44.92. My sense is the path of least resistance is lower, and a test of 44.30 is not out of the question, right? Who knows? That could even happen today if it really gets kind of ugly, right? Now, to be clear, the S&P is nowhere near testing the lows of January at 42.20 or February at 41.30. So there's no reason to light your hair on fire. Take a look at the most recent damage of some of the names you own. And if the story remains intact and you still like the name, then you have a choice. You can put more money to work. But if you remain anxious, then you can just put it in cash. This way you put it away so it's in the account, but put it in cash and sit tight. There's always time to deploy it. Earnings start this week, and we're beginning to hear how Fed policy, economic stats, and the Russian crisis is affecting bottom lines. Shell, the most recent disclosure. Expect to hear more in the weeks ahead. None of this should surprise you, though. But what we want to see is how these companies intend on dealing with all these headwinds. On a side note, Lonnie Musk is not joining the Twitter board, so that leaves him in a position to do anything he wants with his money and the stock. Remember that if he joined the board, he would have had to play nice in the sandbox and cap out his ownership at 14.9%. Apparently, he's not so sure that that's the way he wants to play. This morning now in the pre-market, the stock is quoted down about 4 or 5% or $2 a share or so, right? Okay, so and probably going to go lower, depends, or could go higher, depends on kind of how aggressive he gets. So let's just watch. My sense is lower at first. Okay, so we're having the roasted leg of lamb as Easter's coming. So in my house, we make the lamb for Easter, besides the lasagna and the Italian wedding soup and all the veggies, followed by desserts and the limoncello, which just is a digestive, so it helps you digest after you eat all that stuff. So for this leg of lamb, you need to make the dressing. And for the dressing for the leg of lamb, you need olive oil, fresh lemon juice, you need 6 cloves of garlic, fresh rosemary, kosher salt, black pepper, right? Now you want to make the marinade, you want to add all those ingredients to the blender or food processor and process until it's nice and smooth. The marinade should be thick in consistency so it does not run off the meat while cooking and it forms a bit of the crust. Now, preheat your oven to 425 degrees. Get it all ready for you, right? Now you're going to take your leg of lamb. Let's start with the potatoes first, because you're going to make potatoes with this as well. So peel the potatoes and dress the potatoes with olive oil, salt, and pepper, fresh lemon juice, garlic powder, and oregano. Toss those, mix those well. Put the potatoes in the bottom of the roasting pan. Now take the leg of lamb on top and put it in the oven. You're going to season it with salt and pepper. Put it in the oven and roast it for 25 minutes. Now turn the oven down to 350 degrees and cook it uncovered, right? You want a rule of thumb, you want to 20 minutes per pound is about right. Now you want to take that dressing that you made and put it on top of the lamb and continue to let it to cook, right? Now you want to make sure that you're basting as the lamb is cooking. You want to baste it with the juice that's in there plus the marinade you put over it. You want to baste the potatoes, baste the lamb when it's cooking, right? When it's done, you want to remove it, cover it with tin foil, let it rest for about 15 minutes. Put the potatoes back under the broiler so that they get a little bit golden brown while the leg of lamb is resting, right? Now you want to slice the lamb, you want to arrange it nicely on the platter, you want to circle the meat with roasted potatoes, you want to make sure you serve it with a large mixed green salad. This on top of everything else you've already served. This is the final piece of the entree on Easter Sunday. In any event, it's going to be an interesting week. The weather here in South Florida is supposed to be absolutely spectacular. You can see outside as the sun is coming up now. It's going to be another gorgeous day. So until tomorrow, I'm having my Dunkin'. Take good care.